Hello everyone, my name is ABKFX and welcome back to my YouTube channel. If you know that you are trading CRT or ICT and you have not yet found consistency or profitability, then this video is all you will need, or this series of CRT model is all you will need to be profitable. I know, you might be thinking, yeah, CRT, everybody is talking about it, it has been on the internet for a couple of years now, and a lot of people are finding profitability with it, but a lot of people are not finding consistency with it, because we all know to be a profitable trader in a long time in the forex trading industry, you need to be consistently profitable, and CRT might be just that for you. But the issue with trading CRT is a lot of people trade it the wrong way, not necessarily the wrong way. They have the right information, but they have the wrong context of looking at this information, and also they miss certain aspects of the key components of trading a CRT. First of all, the most common issues on the internet, or the most common problems that forex traders or CRT and ICT traders have with trading CRT is identifying the right candlestick to trade. And in this video, it is the easiest thing to actually identify. My focus on this video is to simplify it to the best of my knowledge, and for you to understand that it is not something hard, it just needs patience and timing. To understand CRT, we first need to understand what a range is in a candlestick, and it just refers to the distance between the highs and lows of a candlestick. In a smaller time frame, in a higher time frame, you can always see CRT. CRT is everywhere in on the chart. It does not matter the time frame. The four main components of a candlestick is, or the only four components of a candlestick is the open, the high, the low, and the close. The open and the close are fixed. Market opens at so time and closes at so time. A candlestick open, a 1 hour candlestick open at 1 minute and close at 60 minutes. The only thing that you need to identify is where the high and the low of that candle is going to be printed. In understanding CRT, you need to understand the relationship between the higher time frame and the lower time frame. A sync between those two time frames is what will help you understand CRT. And to understand CRT, or to trace CRT perfectly, then you need to understand ICT's power of 3. Yes, you heard me right. ICT's power of 3. ICT's power of 3 is the foundation factor in CRT. A combination of ICT's power of 3 will help a trader time his entry in the market with exact precision. Accumulation, manipulation, and distribution is all you need to understand the logic of trading CRT. In order for you to catch a logical trade, then there should be a proper accumulation, manipulation, or distribution of a normal range. Without that, then you shouldn't take a trade. The entire process of accumulation, manipulation, and distribution is known as the heartbeat of the market. Zooming into the lower time frames to identify the accumulation, manipulation, and distribution of a higher time frame, CRT will help you identify your entry and exit points. This picture might be controversial to what you all know as a CRT. Whenever we talk about CRT or you people come across CRT, the diagram that is always in front of you is always a three candle formation where we have the first candle as your CRT candle, then the second candle as your manipulation candle, and the third candle as your distribution candle. And in this video, I will tell you to say no more or to look no more at the market in that perspective. As a CRT trader, your job is to identify two things: the range you want to trade in and the range you are trading in. As I said earlier at the start of this video, you only need two things to be profitable as a CRT trader or to be consistently profitable as a CRT trader. You need the power of three. Then you need to understand the relationship between the higher time frames and the lower time frames. Every candlestick has four major components. We have the opening price and the closing price, in a bullish example being a fixed price. And your job as a trader is to identify where the low and the high of the candlestick will form. I want you to shift your perspective. There is no harm in trying. Walk with me on this journey and let us see if this is going to be a shift in your understanding of CRT. Focus no more on a three candle formation and start focusing on the candlestick you want to trade. The higher time frame is less significant to the higher time frame. Deeper in this video, I will show you why I said this statement. A CRT candle or a CRT range is the easiest to understand. Once you see it, you will know it. What I want you to focus on is the candle at hand, which you want to be trading. Focus on the lower time frames. Focus on your accumulation phases, which you will avoid trading. Wait for your manipulation and catch the distribution. This will be the quickest trade you ever take. For a bearish example, we have the open, we have the closed, fixed, we have the high and the low. We have your accumulation on the lower time frames, your manipulation, and your distribution. Moving on. This is where a lot of people get it wrong. Identifying your candle range or your CRT candle to trade. CRT revolves around the idea of each candlesticks on a chart representation representing a range of price action. A lot of people focus on one candlestick as a CRT range. Let's leave that aside. But the most important thing you want to focus as a CRT trader is to identify a key level around your CRT. A key level are important price level which form as support and resistance in the market. And as ICT traders, we know that support and resistance in the market are points that we look at order blocks, fair value gaps, liquidity void, previous swing highs and lows in the market, break of structure or change of character, also known as breaker blocks, and a few other things that we look at. Before you identify your CRT candle to trade, once you come up in the chart, I want you to look for these things. First, before you even identify anything on the chart, I want you to look at these things on the higher time frame. You should look for, if market is bearish, then as you can see on this video, we have the premium, we have equilibrium, and we have discount. If market is bearish, coming on the chart, going on the higher time frames, what you want to be looking for is external highs, that is swing point in the market, rejection blocks, order blocks, breaker blocks, or break of structure or change of character, and fair value gaps. These 5 things are what your eye should be drawn to coming on the chart. If you are bearish, if you are bullish, then you want to be looking for this set of things in the discounted side of the market. CRT around key sessions. Timing is very crucial in trading CRT. If you find it difficult in identifying your CRT candle, or you don't know which CRT candle to trade, then today I have uncovered it all. All you need to focus on is 3 things: your 3 skill zones, your Asian section, your London session, and your New York session. These are the most important period of trading the forex market. Everything intertwines and it always comes back to 2 things: understanding the relationship between your higher time frame and your lower time frame, and understanding ICT's AMD, accumulation, manipulation, and distribution. Where a lot of people get it wrong is they always focus on CRT as a single candle or a 3 candle formation, whereas CRT should be looked at within a particular session. It could be a single candle, it could be 2 candles, it could be multiple candlesticks. In an Asian section, that is where your accumulation candle is going to form. That is your CRT high and your CRT low. You can pick a particular candle, you can pick 2 candles, or you can pick the host range. Your accumulation, so let's look at it. We have your Asian range, which might comprises of all these candlesticks on a higher time frame. Also, you're on a lower time frame. And in a higher time frame, this could be 3 or 4 candles, or 1 candle, or 2 candles, or 3 candles. And what you want to see is a manipulation of this candle, of the Asian range, or of the Asian CRT candle during the London session. During the London session. So the London session candle is what you want to be trading, or where you want to start looking for your reaction on the lower time frames. So once the Asian session have formed, you can go to your higher time frame and you mark your CRT high and low. If you want to use a single candle, good and fine. If you want to use multiple candles, good and fine. Then you go into your lower time frames and you want to see a distribution during the higher time frames, during the New York session, into your draw on liquidity. So let us put everything into context now. Your CRT range is your Asian session, depending on the amount of candlesticks you want to use, which is your accumulation phase. Your manipulation phase is your London session, which you are waiting for market to take out the CRT high and low depending on the time frame. Then very important, into a key level. So those point of interest, or those key levels you identify immediately coming into the chart, you want to see an Asian range build below that level or above that level, depending on the time frame you are trading. Then you want to see a manipulation into that key level on a lower time frame. Your business with the higher time frame is limited. You want to be on the higher time frame, looking at for your key level, looking out for your CRT range high and low. That's all. Then you want to be on your lower time frame, looking to see the reaction within that key level. Then during the New York session, you want to see market expanding towards your drawn liquidity. What you want to avoid, participating in your Asian range. You don't want to trade the candle that is going to form your CRT. Then what you want to also avoid is market not manipulating your CRT high and low and moving in direction of your draw on liquidity or against your draw of liquidity. You do not want to participate in trading once there is no manipulation into a key level. There has to be a manipulation into a key level, I repeat. Without a manipulation into a key level, there is no trade. What do you want to see on the lower time frames? This is what you want to see. You want to see market diving into your key level. You want to see a change in state of delivery. A change in state of delivery. The candle or the series of candles on the lower time frame that dip into your key level, you want to mark out the opening price. A close above the opening price with a full body candle will be your change in state of delivery. Your entry will be at the opening price, your stop loss below the the candle that dive into the key level, and your target will be the opposing side of the candlestick or the CRT range. 50% you should take half or full profit, then 100% on your draw on liquidity. For a bearish example, the same thing. You want to see market tap into your manipulating your accumulation into a key level. You want to see a close below the candle or the series of candles that tap into your key level. You want to see retracement back into that level. 50% you want to take a position of into your drawn liquidity. Candles range theory and time frame. You might ask me, higher time frame, lower time frame. There must be a understanding of which higher time frame then which lower time frame. You cannot pick a 1 hour and go to a 1 minute. You would get chopped. There is a time frame alignment between a higher time frame and a lower time frame. Using a monthly CRT level, you want to look as your higher time frame, you want to look at the daily candle for your setups. You want to focus on the daily candle. Looking at a 1 hour, if a daily CRT, you want to look at your 1 hour as your lower time frame. Looking at 4 hours as your higher time frame CRT, you want to look at 15 minutes as your lower time frame. Looking at the 1 hour time frame, you want to look at 5 minutes as your CRT. Looking at the 15 minutes, you want to look at the 1 minute as your CRT. We are going to go deeper into this. In today's video, we talked about trading CRT as a day trade and how to identify your candle range. I'm going to do a video about for swing traders, for short-term traders. Final notes: candle range theory is an important concept in trading realm. Combining ICT with CRT enhance technical analysis and the ability to predict the market movement. Always ensure your analysis is aligned with the higher time frame. Trading revolves around sustainable risks and may not be suitable for all investors. Always use risk management strategies and never trade with money you cannot afford. And this brings about the end of the part 1 of the CRT series. I hope you enjoyed this video. If you do, leave a like, a comment, and share the video in order to help the algorithm find more people. This might be the change in your trading strategy or in you understanding CRT concept. Thank you and have a nice day.